Okay. Good morning, everyone, and good evening. And welcome to our third FinTech Friday session of 2024. My name is Karyl, and we have an amazing panel of experts with us today for a great discussion. Before we start, just a reminder to keep your microphones on mute and rename yourselves to include your name and institution so that we can identify you when you ask questions. We will be offering interpretation services to Spanish. To join the interpretation services, please click on the interpretation icon that you see, the globe at the bottom of your Zoom screen. In case you are on a mobile or a tablet, please click the three dots to find the service. And then next, choose your preferred language. You can choose to mute the original audio if you would like to. Participants who wish to listen in Spanish must select Spanish now. All those who wish to listen in English, you don't have to do anything as the main session will be in English. Okay, so let's get to the topic. So over 400 million women entrepreneurs worldwide have the potential to grow their business, contribute to the economy, and create jobs, but they lack the necessary financing. Closing the gender gap in entrepreneurship, where women and men participate equally, could add $5 to $6 trillion to the global economy, representing a $1.7 trillion growth opportunity for financial service providers. Despite this strong business case, the female economy remains largely untapped by financial service providers, including fintechs. Our research, Gender Intelligent Fintech Design, how fintechs can capture the female economy, shows that fintechs could actually boost revenue up to 12% by attracting as many women as men to their platform, and up to 70% by converting women at the same rate as men. Financing women-owned micro, small, and medium enterprises, so WMSME, which you will hear a lot during the session today, offers fintechs significant growth opportunity. The objective of today's session is to showcase best practices and lessons from fintechs that are successfully reaching and financing WMSMEs. It will cover strategies for attracting women entrepreneurs, addressing key barriers, such as lack of collateral, lack of documentation, thin credit files, algorithm bias, etc., and converting them into clients, ultimately bridging the global gap in access to finance and usage. You will get to hear firsthand from fintechs implementing effective strategies to ensure greater access for WMSMEs. And to do just that, we have an amazing panel of speakers, including Carmia Lureman-Norton, Head of Strategic Delivery and Customer Experience at Jumo, Lucinda Revell, co-founder and COO at DISCUSSANTS, and Thea Olivier, Executive Operations at RetailCapital by TymeBank. So, without further ado, I'm going to stop this and we're going to get right into the topic. Carmia, I'm going to start with you and maybe I'll just give a quick intro into Jumo and then ask you the question. So Jumo was founded in 2015 and is the market-leading banking as a service platform that uses AI to power financial services in emerging markets. So Jumo offers savings and credit products to entrepreneurs, as well as financial services infrastructure to partners such as e-money operators, mobile finance, fintech platforms, and banks. In just 10 years of operation, Jumo has enabled disbursement of $6 billion in loans and reached over 25 million customers and small businesses. Jumo is active in 8 African markets. Carmia, based on all of this and all the experience that you have and the knowledge that Jumo has, what are the main challenges you face in providing financial services to women MSMEs?
Thanks, Karyl. I think at the end of the day, it is still reach, unfortunately, as much as we don't like to hear that. So from inception, it's been very important to us to design our products to remove as many barriers as possible and extend accessibility as much as we can. And, we do a lot of research with women users specifically. Any kind of analysis we do, we disaggregate the data, we try and uncover what could be barriers. But the reality is that I think there is, various things that hinder women in taking things up that don't necessarily sit within the product construct or the user journey. And of course, sometimes those can be social norms. Sometimes that can be just what especially in the credit space is a healthy caution, in the use of credit products. But of course, where it's there can also be things like a caution in the use of digital services that'll come out. So there are these very nuanced like use cases that we find in our research where we have to try and create interventions. But I would say that ultimately our biggest challenge is still reach.
Okay, very fair. I'm going to move to Boost and just give an intro, because I want to ask this first question to all my three panelists and really hear their different perspective on these challenges. So Boost Capital is a white label SaaS platform that allows banks to onboard customers via chat through smartphones in just 5 to 10 minutes without an app. Chat offers the biggest possible funnel for new customers to apply for loans, credit cards, and savings products, and Boost can enable applications on 100% of the smartphones in each market. They have enabled over 5 million applicants across Southeast Asia, and they are active in Philippines, Indonesia, Cambodia, India, and Singapore. And within 2024, they increased their partners 3 times, and the applicants enabled tenfold. So, Lucinda, what are the main challenges you, maybe directly or through your partners, face when providing financial services to women MSMEs?
Yeah, I think women are time constrained. We all know this, but entrepreneurs are already juggling a ton of commitments to their customers, their staff. If they have family responsibilities, they have to juggle that too. So we found with our work at Boost that it's really important to save their time. So first, you have to save them time in transit. By applying in chat for a financial service, they can apply 24/7 from anywhere. Second, you've got to save their waiting time. Our tech lets applicants know within 5 to 10 minutes if they're qualified for a financial product. And that's based on the financial service provider's products and underwriting. It's tailored to the applicant in real time. And that's really, I think, the opposite of how many financial service providers normally operate. Like traditionally, you have a customer that fills out like a 5-page application form, and it includes every bit of information, and it includes like their child's pet name before you can even start the process. In contrast, with our method, we save the customer time, and we're also protecting their privacy because we don't ask them a ton of personally identifiable information before we need to. And then secondly, very much in agreement with the point about reach, a challenge that we found is connectivity and tech savviness. When we first started Boost in 2018, we really thought that we were going to build a native app for smartphones. But we follow the mantra that you should always be testing with real clients. And we very quickly, in doing that testing with real users, found that in especially emerging markets, people struggle to download an app. It's either they don't have enough space on their phone, or they had to go to a phone shop to get it downloaded because they don't have an app store account, because that requires having an email, or even once they download the app, then they struggle to figure out how it works. So instead, we tried building the client experience in chat because basically everybody's already using it. Like that, we were observing and we're like, oh, everybody's already on their phone, they're chatting with friends. So we thought, let's not ask the customer to learn a new technology in order to access a financial service. Meet the customer where they already are. And I think that that's sort of the secret insight that we learned when we built this, which is that if you're building using the tech that they already use, you have a huge new number of customers that can access financial products.
Very true. Very true. And now I want to turn to my third speaker and get her perspective on this. So Time is a neobank in South Africa that reached the extraordinary milestone of turning profitable in December 23. After just 5 years of operation, it reaches 10.8 million customers globally, and over 54% of TymeBank's customers in South Africa are women, and products such as Buy Now, Pay Later and Merchant Cash Advance have a strong female reach. RetailCapital was bought by TymeBank at the end of 2023. So, Thea, what are your, what's your, take on this and the challenge that you face when providing financial services to women MSMEs?
I think it's very similar to Carmia and Lucinda's comments. I think, the lack of business financial literacy is a huge thing within any of these emerging markets. In South Africa, we see that every single day. And for me, a lack of networking opportunities for business owners. Women are often in business meetings, and the imposter syndrome is real. They feel they don't belong there because they might not have the same level of education to be able to speak, with their bigger counterparts. Communication gaps, specifically in the very poor communities, in very rural areas, plays a massive role. And, it's also created this lack of trust. Because if you don't trust the brand, if you don't trust the process, if it's so difficult for you to actually do it, how do you proceed? How do you put your money in a bank if you don't know if you can trust it and know that it's going to come out on the other side? We've definitely seen that digital adoption for women was slower than for the men, but when they adopt it, they'll actually stay. So I think the work that's done and the opportunities that has been created by placing kiosks in retail stores, in grocery stores, is one of the biggest success stories for the group. And a lot of the products that was launched in South Africa, and specifically the RetailCapital Merchant Cash Advance product, has been introduced to Southeast Asia. Vietnam's launched, the Philippines is using it. So it's a successful business model that has transformed into different countries, and it is very much looking at data, trying to take that whole nightmare of having a pile of papers to work through to fill out. That's very complicated. That prevents females from actually getting any funding.
Amazing. Yeah. And I see a thread between all three of the comments, and it's about reach, time, convenience, and presence. So it is always about, how to access the services for women and being there where they are and trying to reach them and then trying to make it as convenient, whether it's in the phone or it's in the grocery, or it's always about that. And it seems to be the most prevailing challenge within all three of you, and not, for example, what I would have thought would be the lack of documentation or the lack of collateral or the other more conventional challenges that we would think would be the top one. So it's very interesting, and it's great to see that if that's not the biggest problem, but we know it's a big one, it also means that there are other types of tweaks that you can do to your services to really get out there and start becoming more forthcoming and being able to provide that financing. So Carmia, I want to turn to you. So I want to ask you two questions. One is, what is the percentage of your loan portfolio that's for women entrepreneurs? I mean, you talked about sex disaggregated data. So what is the percentage of women or women-led or women-owned SMEs? So depending on how you define exactly, so it'll be great to hear that. And then, are your products are designed in a way to be more accessible to women? I mean, knowing what you know of your portfolio and the reach and the total market that's out there, do you design your products and services accordingly?
Thanks, Karyl. Yes, I think, so to answer the first question, just over a third, so probably about 35% of our platform customers are women. So maybe just for the context of the audience, we do, and it's part actually of making the product as accessible as possible to anyone. We do not specifically target a business or a consumer or a specific type of business, but it's openly accessible. And what we then do see is that about 2/3 of the platform customers identify as business owners. And of those business owners, 2/3 of them are women. So that's, it's very, it's good to see. Women, what we do also tend to see is that they make use of their loan use for women, for business purposes, quite strongly as well, especially the longer their tenure on the platform. In terms of the product design, I think, listening to Lucinda and to Thea talk, there's a lot of similarities there. I think, specifically because we are also in Africa, where the accessibility and the cost of data and also even smartphone penetration isn't always even as high as it is in, for instance, the Southeast Asian markets, etc. In Africa, we do focus very much on trying to, in the design of the products, always cater to the lowest common denominator. So in our case, for instance, we actually use, while we do have some our products, we have over time evolved our products to be available on our partner apps. We predominantly make use of USSD technology. And so and not everyone is familiar with USSD technology, so maybe also to explain that is technology that is accessible on any type of phone. So whether that is a feature phone or a smartphone, and it is completely text-based. So there is no data cost associated with it. It's generally the cost is usually carried by the provider. So it's very, in that way, very accessible. But it means that when it comes to the actual journey, and our user testing there with women, you can imagine we have over the years had to go with all our different products and often go and sense check, right? Is the language understandable? Is it, are we using the right words in that particular region? I mean, even if, you'll find that a word that resonates in a journey in one country doesn't necessarily resonate in another. Similarly, things like, how the fees are portrayed, what do women find intimidating? A lot of our research in Zambia showed, percentages. If you can give me a set amount, rather give me the value rather than the percentage, things like that. So we do a lot of that kind of research in our user testing, especially when it comes to a new product. And then I would say, the thing there that of course does become tricky, especially with older women, is literacy, depending on the markets. And we find there that, some women will actually go and navigate based on numbers. So again, it being a text-based technology, press 1 for this, press 2 for that. They will actually memorize the sequence of numbers that they need to press on the phone in order to get access to the product. And so what is very important is that when there is a change either on our side or the provider side, and thankfully over the years we have not had many of these, but where the USSD dial code changes, we need to make sure that we have a lot of communication flowing through the partner networks, through our own training initiatives, to make sure that women are aware that that dial code has changed. And that's where it is very useful that we are partnered with partners that have very vast agent networks, because that of course becomes invaluable, as Thea mentioned, in terms of offering some real world support and actual touch points for women to get that kind of information.
Amazing. And maybe just to build on that, so if a woman is a first-time borrower or doesn't have a lot of credit history, how have you solved for that?
So we don't actually require credit history in order to gain eligibility. The data that we use is generally alternative data. So it's mainly based on their mobile usage data. So that can be things like, how many text messages they're sending, what phone calls they receive, which numbers they interact with. And then also, of course, in Africa, many of the markets, the mobile money ecosystems, for those people not familiar, are a very big channel as an alternative to traditional bank accounts. And so, of course, we also look at the transaction data that runs through those accounts, but that's not necessarily credit data. And so that's what provides many customers with an entry point to credit that they wouldn't have had otherwise, is the fact that we don't actually require a credit profile.
Amazing. And that does definitely create a lot of opportunities for many women. Lucinda, I want to turn to you and talk about, Boost solutions. So how does Boost address the needs of women MSMEs and then create, greater financing opportunities for them?
Yeah, well, Boost was designed by women and for women. I mean, I'm one of the co-founders. Our head of product is female. Our board is gender balanced. So we've definitely brought that perspective into it. I think that I've touched on, and the other speakers have also touched on a lot about how the technology, the word choice, the phrasing, the accessibility can remove barriers to female entrepreneurs accessing finance. So actually, let me go a little bit beyond that and talk about something a little different, which is the challenges that prevent maybe financial service providers like banks from actually adopting solutions that best meet the needs of women MSMEs. The reason that I'm in a position to talk about this is because we white label our technology. So it means that we deploy it over tons of banks and tons of different financial service providers. And I meet with them on an ongoing monthly basis because we're always talking about what A/B tests can we run, how can we improve the funnel, how can we improve the accessibility. So I get a lot of feedback from like across the board about what are the challenges that financial service providers face. And then also we have to do business development across all these different banks and try and convince them to adopt innovative technologies. So I think addressing, if you want to really reach a lot of women, like you can have a great tech solution, but if none of the banks are going to use it, it doesn't actually help the entrepreneurs, right? So addressing what would stop a financial service provider, I think, is important. I think that most banks have very busy IT teams. Some are overworked IT teams. Some are understaffed IT teams. So if you need the bank IT to actually implement a new technology, it will happen 12 months after you start. And if you want to create a new digital offering specific for female entrepreneurs, then the credit committee gets involved and the risk committee weighs in, and that adds another 6 months. So what we found is very crucial is to firstly keep the integration job for the technology really light for the IT team. So you don't start with a ton of API calls between the system. We tailor our technology. So there's actually only one point of data transfer so that their IT team is not able to act as like a bottleneck or isn't the bottleneck for the process. Secondly, we start with the same offline products that the bank is already marketing. So we collect the same application materials as if the customer went into a bank branch. We just do it digitally. And that means that because the credit committee and the risk committee don't have to make any new approvals, we can launch with them in less than a month instead of it taking more than a year. So in fact, I think our last partner launched in 11 days after the contract was signed, right? So you've got to make it lightweight for the financial institution to try something new.
Amazing. 11 days. The banker in me, the former banker in me is amazed at that. Okay. Thea, I want to come to you again and then talk about how you at RetailCapital and TymeBank have addressed the challenges related to collateral requirements, which can often be one of the biggest barriers to women entrepreneurs accessing finance.
Yeah, I think before I go there, I just really want to, support what Lucinda said on dealing with traditional banks compared to, we're lucky we're dealing with a very fintech, agile, technology-based bank. And, we've also behind the scenes as a white label, dealt with the traditional banks. And your process from start to launch is so long and so laborious that, it is actually, quite frustrating. But getting back to the collateral and what we've done is, it's really about the digital journeys for us. And it's, for us, the digital journey has taken the gender bias out of this process. Traditionally, it could have been that, females were declined a lot more easily because, you were seen as being a higher risk, which is absolutely ridiculous. Because we actually see that females are lower risk. So taking the gender bias off the table it's actually driving sustainable growth across the organization. And because the women were traditionally less banked and less likely to have the credit record, it's in a traditional bank, you need to go and sit and long credit profiles pulled. And if there's nothing, it's like, oh no, can't do anything because you're not credit worthy. My favorite word in the word worthy. What makes anybody worthy to be to take out funding? But so taking that away, what we've done is we're spending a lot of time on analysis, looking at spending patterns, things like looking at, sales of airtime, sales of electricity, gaming vouchers, the digital footprint and the behavior of the customer can be assessed. And using that information, it allows for small amounts to be made available to the client with confidence. And, it's really using the AI tools to monitor the customer spending patterns has become a fundamental part of the personal loan offering. Within the merchant cash advance product, there it's all about the data. Understanding the customer's turnover cycles, understanding, what is going on within the business itself has made it very easy for us to actually put an offer out there for the customer. And it is really about taking the data and looking at how they're spending the money. And obviously, if you've made an offer, they pay it back. It creates an opportunity for them to come back and actually take funding again. So, and because the process is so easy and easy to understand, easy to follow, and I mean, we've done obviously surveys, in general, customers are finding that it is really seamless process, and they don't have that absolute fear of documentation when they come into the process. And it is about the we all know, and you'll know, in banking it's always about do you know your customer? And it's I always change my voice when I say that, because it feels like so official. And that's another stumbling block for anybody trying to get into the market. And because we are embedded and so deeply embedded with our partners, and the partners have long histories with the client, we can actually leverage some of that information. So it is really helping to get these applications through the process very, very easily. So yeah.
Thank you, Thea. Carmia, what criteria do you use to assess eligibility? I mean, I know you said you don't require credit history, but there's definitely some criteria that you use to assess credit worthiness and eligibility to tax finance for women SMEs. So how flexible are you in your requirements in terms of whether it's collateral or information, or how do you assess?
I sometimes think people think I oversimplify it, but look, Jumo has been around for 10 years, and we've been using machine learning and AI throughout to obviously build our customer base and also improve our prediction models. And so, yes, as I said, it's predominantly literally usage behavior of the phone and of the mobile network. Within that, then the eligibility is really then dependent on, because so this is maybe where it gets slightly more involved, is we are a banking as a service platform. So we do actually also provide we do everything from the origination through to the asset management, etc. So the reality is that we will then look at who is the funder of that particular portfolio, what is the cost of risk, and how is the portfolio performing, and we are adjusting in real time. So that can impact eligibility at times. We obviously strive to get the lowest possible cost of risk to the end consumer, to the funder, so that we can get the price down for the consumer. So that's how we generally approach it. Thankfully, we have been able to, and the other thing that we do have is that we are generally able to, I think it's probably one of our, one of the appealing points of our platform is that we have over the years, because as I mentioned, we really do work kind of at a very bottom of the pyramid level within the African markets, and that's a very costly market for the banks to serve normally. So because of that, we have been able to attract a lot of capital onto the platform. And I think we're one of the, I'm going to speak under correction, but I do believe we're the only platform that has multi-funder capability within one portfolio. And so we do the asset management of that in the background. And so that actually enables us to really kind of always be balancing what is the mandate to the funder versus what is the portfolio return that we're seeing versus how can we adjust that for the customer. So, and how we then also actually return that to the customer, which is what I always think is one of the best parts of the platform, is that, as the customer's behavior on the platform improves, we are able to adjust pricing and offers to them. And so, of course, that, well, besides the fact that it builds loyalty into the platform, it also means that we can really give customers that return on the behavior that we see them display on the platform as well. So that helps too in terms of managing this kind of entire, I suppose, ecosystem of different funders and different individuals and matching the right price to the right customer and the right cost of risk to the right funder, etc. So it's through doing all of that, we have amassed a lot of data, and we have 10 years of evolved models and prediction models that we can rely on. And so we're actually at the point that for an individual consumer, we need very, very little, because we can actually map back to the patterns that we've seen over the 10 years of data that we've collected, which is amazing because it means that it's just continually improving.
It is amazing. And I want to maybe poke you on that and just ask, do you know the non-performing loans rates of women versus men, with all the, the approach that you have? Have you seen women's portfolio be riskier or be more challenging than men's?
So the interesting thing is that we actually do not, so as part of our models, we don't require gender in order to be able to profile a customer. So most of what we see is then based on after the fact analysis. And so I can't give you the NPL based on women versus men, but what I can tell you is that all of our research has been consistent in showing that when we do post-fact disaggregate the usage data, that women are do show a slightly higher propensity to repay their credit than men do. So,
okay, perfect. So good. Lucinda, I want to turn to you and ask you. So we've been hearing a lot about the challenges and possible, ways of really addressing these. So what do you think are the key ingredients and the features needed to create greater access to financing for women SMEs? Is it AI, alternative credit scoring? We kept hearing all of it. So what do you think is, the top 3 or 5 things needed to really create that access to finance for women SMEs?
Yeah, I think generally, to serve the greatest number of women MSMEs, you need 2 things. Like you need really great tech, and you need financial service providers using that tech to better serve their customers. And we've built a technology, and we're always on the lookout for bank partners that want to scale up their female entrepreneur clients in collaboration with Boost. Tech elements of that, like AI, of course, is a huge new opportunity. We've integrated AI to enable natural language processing so that we can be chatting with the applicants comfortably in their local language. We also use AI a lot for fraud detection on the IDs and the supporting documents so that the banks are comfortable with the quality of the digital applicant in the same way as if that applicant was going into a bank branch. But I think, interestingly, the best unlock we've had so far in expanding access to finance has actually come from a partnership that we have with the MasterCard Center for Inclusive Growth. We've been working with them in the Philippines on a program to enable more FSPs to use Boost technology. The aim is to have over 30,000 MSMEs able to access financial services through the partnership. So the program is actually subsidizing the one-time customization fee that the financial service providers pay to Boost to customize our technology. We normally customize to the bank's financial products, the bank's underwriting criteria, and we do a one-time fee for that. In the 4 months since we started that program, we've already like way blown past our project goals. Like we were aiming to launch 3 to 5 banks, and we're already at 4 times that. So basically, we found that making it easier for financial service providers to deploy a tech solution has a huge impact, which then flows through to the female entrepreneurs.
Amazing, amazing. So that's a great perspective, and I think one that we really need to keep talking about the complementarity of fintech and banks working together, and how they can together as an ecosystem approach really solve for a lot of the challenges that we have individually as separate entities. So Thea, you talked a little about rural women initially, and the geographic reach and all of that. So do you accommodate for that? How do you really work with women who are distant and in rural areas and they have limited digital literacy? So how have you solved for that?
So I'm going to cover two different sides of our coin. I think the first is, by putting those kiosks and it feels a little counterintuitive. We're a digital bank, but we've got these kiosks that's manned by by people supporting customers. But we've got to understand South Africa has a huge population that's sitting in more rural areas. So for them to get to a bank, to go and get any services, get a statement, even sign up for a bank account is practically impossible. So the fact that these kiosks are now placed in retail shops, grocery store, fashion retailers, has made an incredible difference. In South Africa, and I know, other countries are suffering the same thing. Traditional banks have very short working hours. I'd love to work in a traditional bank because you work very set hours. You don't need to worry about it. Yeah, sorry, I'm not slaying traditional banks, but it is very frustrating. And as a woman working, I struggle to get to the bank as well. So for us to have put these kiosks in grocery store and retailers, it has opened the door for women to be able to actually get access to banking, because still in our world, who's going to go do the shopping? It's the woman. So the fact that she can actually go sign up for a bank account and actually get a card at the same time as doing her shopping has been the advantage. So extended hours and a huge reach. I mean, on day one, when TymeBank put the kiosks in the retailers, they immediately created the biggest banking footprint in South Africa. And that was on their first day. And it's purely because there's so many of these retail shops and clothing stores that now actually has the kiosks in there. Coming back to literacy and adoption, the kiosks are actually manned by, and I'm saying manned, I should be womaned, because women are actually there to assist customers in signing up and in understanding how to actually use these kiosks. And about 70% of what we call our ambassadors are actually women. So which has immediately created job opportunities as well in these rural areas. So it's not just about creating banking, it is also about creating jobs within, areas where people traditionally wouldn't have been able to work in financial services. And within the Merchant Cash Advance product, we have such big relationships with partners that go out. They have teams that goes into all areas and actually signs up merchants. They are spreading devices throughout rural areas to informal traders. So all of a sudden, an informal trader actually has access to a device, which means that they can, have customers use their TymeBank to tap, their TymeBank bank card to tap, And we're using that data again to be able to service and create the merchant cash advance product. So, we've created this ecosystem, and it's the purchase of RetailCapital by TymeBank has just been an absolute match made in heaven, because it's such a nice synergy between having the banking clients and having almost that start of a journey with creating an account, knowing how to use an account, and then as a business woman actually starting to use transactional transaction and selling and using a device, and then we using that data in turn to actually give them funding, which means that they can actually buy more stock, expand their businesses, which means, again, we're plowing that money back into the banking system as well.
Okay, amazing. Carmia, I wanna come back to you. Your first words were the biggest challenge was reach, and I want to ask you, how do you reach women, specifically women SMEs? Where do you find them? How do they know about Jumo? How do you reach them, from your perspective?
I think it's similar to what Thea said, and what seems to be a theme here is partnerships. I think across all of us, it seems like partners are playing quite an important part of our business model. So we obviously make sure that we partner with very reputable and very large partners who already hold a lot of trust in the market, and then also therefore have a large footprint, are very accessible to the customers, and then through that also able to to reach more women that way. Because I think, as Thea, I think it was you also mentioned the skepticism, or kind of that, like, we or more the importance of trust and word of mouth in reaching women. And so when you are partnered with a very large reputable local brand, and generally a favorite brand, that helps. We can, for instance, see that oftentimes, obviously with the market leading ecosystems, that will also be where you will reach more women. And then it's also a bit of a dialogue, going back to our partners and showing, like we can, for instance, see oftentimes that our reach with women is very much linked to the partner's investment in also adding women agents to their agent networks, for instance. That makes it more approachable for women to go and work with those agents. So we can see in specific portfolios where we know that there is a very high number of female agents, that we will see higher usage amongst women on that particular portfolio as well. So then, taking that data back to the partner, opening the conversation, helping them also plan strategically how they're going to extend their own networks. That is important. I think, unfortunately, where the challenge I think that we see with reach is, I always also say there's a careful line to trod with, like, what is your responsibility as the fintech, and how far can you push? So unfortunately, in certain markets, social norms, how women interact, what they are, I suppose, perceived to be allowed as doing within their society or within their community, that's really where the barriers come up in terms of reach, and they are as I said, like things like digital literacy, you can try and help shift on, you can kind of find ways and tweaks and try and work on and make things as easy as possible. You can, try and make sure that you have as many physical touch points as you can, because that they are still important. But we can still also see that in markets where, for instance, women aren't allowed to use a phone, or where she needs the husband's permission, etc., that there are just more, those will generally be the markets where we have a lower number of women users.
Yeah, naturally. I guess that would be expected. So I just want to remind the audience that we will be opening up for Q&A in a couple of minutes. So please do throw in your questions. It's a great opportunity to ask these lovely ladies and pick their brains. So Lucinda, I wanna turn to you, and with all that you've learned over the years with Boost Capital, how are you looking to evolve and adapt your approach to help banks attract more women SMEs?
Yeah, I think I'd like to sort of tie this a little bit to what Carmia was saying about, like, the reach. even once you have women in your portfolio or like applying for a product, not all banks are that great at approving them for products, right? So you've got to figure out how to make it more accessible for women throughout the process, right? Not just reaching them for the application, but making sure that they get approved for a product. We find that a lot of our bank partners are very good and very used to tracking their existing customers, but they do not really track the people that they are declining for services. So the people who are like struggling to access finance, they don't know that much about them. I think one of the coolest aspects of having digital onboarding systems for female MSMEs is that we actually get to see a ton of the data about those that are being rejected for financial services. And then we share that data with the banks so that they can start to adjust on an ongoing basis their product or their underwriting to serve that underserved base. And that change is based not on guesswork, but on real data. But then again, like we also know that most banks don't have big data analysis teams. So we are seeing like the next opportunity for helping banks to serve more women MSMEs is maybe in enhancing our data analysis tools. So we've already like added data dashboards with graph visualizations and filtering capabilities to our tech offering, so that now we're basically presenting easier ways for banks to understand who they're not serving. We're also now looking at using AI to basically create like a virtual data analyst for the bank, so that they can actually ask their data questions in a very natural way and get data analysis back in an understandable way that would then allow them to be inspired and confident in creating new offerings for like the currently underserved. I'd also say the other big answer is that we have to listen to what our bank partners ask for, and we listen to what the end customer is asking for. So in the last few years, we've launched onboarding for savings accounts, for insurance, for merchant payment platforms, and those additional products were all because the bank partners were asking for these tools to be able to better serve their customers. So I think that having a consistent listening approach is really important to helping us evolve how to improve access to finance.
Amazing. Amazing. And I think that's great. And I love the idea of a virtual data analyst, because it is true that data analysis is key, and data analysis is not done properly or enough or in banks, and it's one of the reasons why we also just had a gender data learning series, trying to enlighten and highlight the need of data to be able to at least present a business case and be able to analyze, etc., because it is key. And I think the more we are able to showcase that to institutions, the more we'll have a quicker bridging of the gap of access to finance. And Thea, so I want to come to you and talk about what innovations you've introduced to reduce the cost of loan, because we're talking about a lot about accessibility and all of that. But once you do access it, there's the cost of loan and the speed of approval, that these are key as well. We talked about time poor, women being time poor. So how have you done that for women-owned businesses?
It comes back to creating the technological journeys, and it's that enables quick and easy and seamless processes, which obviously historically did take very long. So having huge teams having to assess a loan, or even the merchant cash advance, it makes no sense. It has to be as streamlined as possible, because for us, a quick turnaround time is obviously the key. In the merchant cash advance environment, because we're using so much of the turnover data, we can actually put a pre-approved offer in front of the customer, which takes away, you can get onto your point of sale device, you can get onto your platform, and you will see that there's an offer for funding waiting for you. It is we call it the three-step process, and some partners is a little bit longer, but it's literally click, click, click and go, and the money can actually be in your account on the same day. We've got partners that disperses instantly. So as soon as you've accepted that offer, you will get the money in your account. So, but again, that is only able to be done because of data. Make analytics do the hard work in the background. I must say, I do love that idea of a virtual analyst, because I think that's the teams that grows and continues to grow at the moment. It's like, it's really hard to find analysts anywhere. So ladies, please go and do some data analysis courses, because you're really going to find a job. And for us, it is absolutely about the very strong brand and the affinity with our partners. Because they're sitting with such rich data per customer, we can actually use that in our process, which means that it's a quicker and a much easier process to approve a loan to a customer. So, and for us, it is absolutely about the convenience, the speed. The quicker we can do this, the less it's actually going to cost us, and we don't need to build these massive teams that's going to do the hard paperwork. And don't get me wrong, we actually have a team that does the physical financial reviews, but that's when we talk about very big loans, and then we're talking about the multi-million rand type of environments. But so having almost the ability to have both of that, and I think just from a merchant cash advance, this is something that's really translated well to the teams in the Philippines, the Vietnam team that launched early on in the year, and the Indonesian team now as well, because using data to actually come up with a pre-approved offer has actually spanned and spread throughout the group. And we are sharing a huge amount of information between the teams as well, which is really fantastic, because we're learning about behavior within the Filipino culture as well. So it is really helping all of us to actually just do better.
Amazing. And Thea, I want to stay with you because there's a question from Inez addressed to you. So based on the success of the merchant cash advance product, which you just talked about, what kind of additional MSME finance products are you thinking of developing?
That is a very good question. So I think it's the synergies. There's always, for any business owner, having almost a separate fund that you can use to do invoices. It's that typical age-old invoice discounting. Not that I'm saying that's our next product, but it is a logical synergetic type of product. And I think all of us have to stand back and go, insurance, especially for a business owner, and specifically when we look at the COVID years, businesses that did not actually have some sort of a cover was very exposed. So, those are the products that fits really well with the merchant cash advance product, as well as a personal loan product. I mean, we all know that, at some stage anything can happen, you can lose your job, and therefore you need some additional cover. So.
Perfect. Okay, so there's a question from Karyl. Very quickly, I want to ask that to you, Lucinda. What data do you use for customers without credit history?
Yeah, so we always follow the underwriting of the bank partner that we're building for. So it's actually their decision as to what data to look at when it comes to somebody who doesn't have a credit history. But what I do think is really cool is that once we give the banks a digital channel, they then have the ability to experiment with new stuff. And also, because we have more data analysis, we can sort of help them with that learning process. And so we've had partners who have asked us to integrate other alternative data, like there's one that's like gameplay for psychometrics. There's another one that's voice analysis for credit underwriting. We've done work, in fact, also with financial education as a way of creating basically like sort of VIP status for the bank. So if someone consumes financial education digitally and then shares their education certificates with the bank, then they get processed faster, that kind of thing. So we're basically trying to sort of use the digital channel to figure out what other data sources that we can bring in. Other examples would be like telco data integration, invoice factoring for merchant financing, all that kind of stuff. Like once you've got a digital record of something, you can do so much cool stuff.
Definitely, very true. Carmia, there's a question from Beatrice, and I want to ask it to you. How do you handle late repayments and follow-ups for WMSMEs?
I would say very likely, to be honest. So we don't there's a once-off late payment fee that gets, so there's no compounding interest when customers repay late or are delinquent. And other than that, to be honest, it's messaging. There's some messaging around, so text-based messages based on, you're overdue. And what we do is once a customer reaches a particular state of delinquency, it's quite a new development, but something that's had really great results for us. We essentially funnel them into what we call a payment plan. So that's like a little bit almost of like helping them structure their day to say, listen, if you repay this much by this date, then you'll only have so much left to repay, and kind of helping them to like break that outstanding balance into smaller increments that they can repay more easily. We don't make use of collections agents. We don't make use of collection calls. We don't do any of that kind of stuff. A lot of our partners, and heaven knows sometimes also the regulators, aren't always satisfied with that. They feel that we should do more. We feel that, we have exceptionally low NPLs, so why harass the customer? There is generally a view that, if we have, especially with a first-time customer, if they don't repay, the error is on us. Because our customers are generally new to financial services, that was a failure of our prediction. And potentially we didn't offer them the right amount. Maybe we should have started with the lower amount. So there's a lot of trial and error that we kind of obviously then go through, especially with a first-time user, and because of that, we try and minimize and not take any punitive measures against them. The question we then get asked is, well, then why do people repay? And the answer to that is really, and this is the sad thing, right? And why we're having these conversations, I suppose, as an industry, is the reason they repay is because access to a credit product is incredibly hard to get. So once you have it, you value it, you do your best to stay on the platform. And then, as I mentioned earlier, our customers also do then see that in doing so, they can increase the amount of credit they can get over time. Their price comes down. And so really that kind of, I suppose, the value that they get for their digital footprint and for building it on the platform just increases the motivation on their end to actually repay the loans.
Can I also jump in with one thing on this?
Yeah, definitely. Go ahead, Lucinda.
Yeah. One, I love your perspective about the idea of the first-time borrower. If they default, it's on you. But I think one of the cool things that we've seen banks experimenting with is about financial education that is integrated at different points in the financial life cycle, and a sort of customer loyalty, retention, prevention approach. And so some of the banks we're working with, we deploy financial education for them that is like micro-tailored to what the customer just like where they are in the application process or the life cycle. So for example, you just took a loan, send financial education that is like, why would you bother to pay this back on time? And again, that education is like, because the next time you get a loan, it's going to be easier. But if you don't, and like, that's when you target them with that loan, but then that messaging, but then throughout the loan life cycle, also continue to provide financial education that is useful for them. And for like small entrepreneurs, it can be, there's so much rich information about there. It can be about like HR policies. It can be about tax compliance, whatever you want, but you drip this to them on an ongoing basis. And we find that the banks that do that, when they're in a digital ecosystem, have better customer loyalty. So the customer actually wants to repay to that bank because they feel like they have an ongoing relationship with them that is similar to what they would normally have if they were having like an individual credit officer who's within their community, right? So if you go digital, you still have to figure out ways to continue that relationship between the borrower and the bank.
Amazing. Thank you so much. And I think we are out of time. I want to make a quick wrap up of everything I learned today. And I just want to highlight that I love that perspective of not being taking a punitive approach with a first-time borrower. And it's so fresh. And for as a former banker, it's so against how banks think. It's impossible. It's the exact opposite. First thing I want to do, though, is I want to launch a quick survey to get people's opinion of the event. If you can just drop in while I make a quick wrap up of what I learned. So biggest challenges, yes, collateral, yes, the lack of documents and lack of credit history, but also reach, being cautious with tech, not being techy enough, time constraint. Over and over, we heard that, whether it is time, the time it takes to get to the service, whether it is the time it takes to apply for the service, and whether the time it takes to actually receive the funds. Connectivity, lack of trust, and then the positive about it is that we have fintechs such as and digital banks that actually have solved for this. They have kiosks, they have some sort of presence. They skip credit history requirements. They go with alternative credit scoring. They have an amazing digital footprint. They are able to assess spending patterns and create different data analytical points that allows them to create access to finance for women MSMEs. And they all survive and work on the spirit of partnership. So whether you're a bank and you're looking for ways to really be able to reach more women MSMEs, well, here are examples of how, fintechs you can actually work with that will help you reach more women and reach even your existing portfolio better and have a much better reviewing and analysis system. So great tech allows for great greater access to women. This is what I learned today. And so when you have great tech and you have financial service providers that know how to use that and implement and work with that great tech, you get magic. So thank you, everyone, for this. Thank you to my speakers for spending your Friday with me talking about this topic. Thank you to my audience for being with us. I wish you all a great weekend. We will have our last FinTech Friday session of the year on November 29th. So mark your calendars and I will be in touch with more. Thank you so much. Have a great day.
Thank you.
Thank you so much.
Thank you.